All right. Good morning, everybody. Welcome to Bridging the Islands, episode 4 with Ryan and Kelly. We're going to talk about condo documents today. I'm Ryan.
And I'm Kelly. Awesome. Good morning, everyone. Yes, let's talk about condo docs today. So, Ryan, what's going on in Oahu this weekend? What's just fill us in? What's going on?
Yeah, so we got a pretty slow weekend this weekend. Today there's a land, sea, shelter, and culture modern exhibit. It's just going to be an appreciation for architecture over the years. That's going to be happening in Honolulu from 12 to 5. On Saturday, we've got a forest restoration workday at Waimea Valley. Um, this one's only for registered volunteers, but it's very easy to get on and register. They only take about 30 volunteers, so you want to get on there quick and see if there's any openings left if you're interested in doing that. And then Sunday, we've got a really interesting event. It's the Blue Water Hawaiian Classic Paddleboard Race from 9 a.m. to 4 p.m. It's 22 miles. I believe that's the distance from Oahu to Molokai, and it's going to go all the way around the South Peninsula the south shore of Oahu. It's going to go around Makapu'u all the way into town, and it'll be pretty interesting. You got a couple different categories too, so it should be cool to watch. What about you? What's going on the Big Island, Kelly?
Well, not too much big events are going on, but I wanted to talk about something that just happened, especially for us condo realtors. We always have to keep these things in mind and anyone that's buying a condo. But you guys probably saw this viral video that went around of the waves over the past week. We had some really big swells come in from the hurricane that ended up turning into a tropical storm. And you can see here massive waves pound Keauhou townhomes. Residents react to swells damage. So we did have some really large swells come up over some of the buildings in one of the complexes here in Kona on the Big Island on the Kona shore. So, yes, you guys probably saw this video go viral, and I just wanted to touch base on how the association is reacting to it. I know a lot of people are probably wondering that. So, this is located in Keauhou Surf and Racket Club, and the association is really on it right now. They just sent out a video, or excuse me, a newsletter, and they're just saying that, thankfully, with every complex, you do have that, which we're going to be talking about here soon, the umbrella insurance policy, the master policy for that complex. So when something like this happens, they're able to activate that insurance policy. And then they're also asking that the homeowners also get their insurance involved. So there's two different types of insurance when you have a condo. You have the master complex insurance that's provided by your HOA and included in your fees. And then you also have your walls and insurance, which is for your personal belongings. And that costs a couple additional $100 a year, but that protects your insides and your belongings. So they're asking that you guys also, or them also, contact their walls and insurance as well. But super on it. That's a great thing about HOAs. If you have a really good HOA, they can be super on it and get things taken care of right away. But yeah, that was insane. Did you see the videos, Ryan?
Yeah, that was crazy. But this weekend was for both Big Island and here. It was like the epic swell of the decade. It was the biggest swell in decades, I think. The waves were just massive. I know a lot of really good surfers that went out, and I guess average surfers that went out and they were like, "No, this is too big." And I'm like, "Man, you guys are all better than me. That's huge."
Yeah.
So that was pretty cool to see the waves when they weren't crashing over buildings.
Exactly. And I've had people that lived here their whole lives and they said they've never seen it crash that high. So just one of those things that happens, something you have to be mindful of when you are buying an oceanfront property or even in a complex that is on the oceanfront property. Thankfully, none of the common amenities like the pool or the tennis courts or anything like that was damaged. It was mostly just a couple buildings, but yeah. So keep you guys posted how that plays out. But I thought that was, yeah, definitely crazy.
Love it.
But awesome. Okay, so today, Ryan, are you talking about this or am I?
Yeah. So
Okay.
I'll start us off. So today we're talking about the condo documents altogether. This is known as your M1. So M1, when we talk about M1, we're talking about the portion in the purchase contract that actually covers your condo documents and what's provided. Um, so it'll go over essentially everything that the HOA has to provide you in terms of the documents, house rules, et cetera, et cetera, et cetera. And essentially, this is another contingency and opportunity in the purchase contract in the escrow period to cancel the contract. And when I say opportunity, we're talking about, hey, this is something that's pretty important to a lot of people. There's a lot of different things that you're going to have to review to ensure that this is a place that you want to live in, that's acceptable to live in. We'll go over kind of the importance of each document that we touch on, but we're going to touch on the most important documents within this list over here on the right today. And the first thing we'll touch on is your timeline to review. So your timeline to review, you'll get anywhere from 10 to 14 days, but a lot of the timelines, it's really going to depend. It's going to depend on what kind of market we're in and what kind of sellers we're dealing with. Sometimes sellers want to condense everything. And a lot of times buyers want to have a longer period. So 10 to 14 days is pretty neutral, pretty average. We see that on a lot of purchase contracts. So you can generally expect 10 to 14 days after the acceptance date to be given to accept the terms of the condo documents. So for clients, make sure that your realtors are on top of that. And for realtors, make sure you're advising or at least, telling your clients what they should be looking for and giving them the rundown on what's important. Because some of this stuff really just doesn't have any meat to it. It's not going to do them much good. But really, we've got to review this ourselves and make sure we're well versed in what each individual set of condo documents has within it, so that we can help advise our clients.
Exactly. So in that, there's a whole M1 documents, there's a whole package that you're going to receive. And like Ryan said, it's going to come to you within the first days of you opening escrow. And who gets the documents? So the listing agent, whoever's selling the home, will order these documents. So they're going to be the most up-to-date, newest information on the complex. So that's why it's really important for you guys to look at, because it's going to be the most up-to-date information. So in this big document, it's going to be a very hefty email, right? It has a lot of pages, a lot of PDFs, but it's going to come with at least 3 board minutes for the past couple months. Do note that some associations get together more than others. So some of these, 3 board minutes could be dated back a year or so if the board doesn't get together as much. But you're going to have 3 board minutes. You're going to have your articles in amendments, some bylaws. There's going to be, if the complex is in any pending litigation, there'll be some information on that. You're going to have your current budget and then the proposed budget for the future, a current financial statement, and the RR 105C, which we're actually going to have Elena back on from our technical difficulty last week. And she's going to come on and tell us about what the RR 105C is here shortly. And then, yeah, I believe that's it. It's a nice heavy document. It's going to have your house rules as well. So we're going to break it down for you guys and tell you what you need to look at for each one.
It's a lot to digest. All right, so the budget and reserves. So this is going very heavily into your finances. One of the biggest things, you want to make sure that the property is budgeting and has enough money to really sustain. So this is kind of gonna tie in with your RR105C and your project information forms as well. You want to make sure that they have a balance sheet. You want to make sure they have a reserve study. You want to make sure that that balance sheet actually balances out. If they're going to owe more money than what's coming in and they're in the negative, then that might not be a good sign. That could potentially mean that, they're going to try to have to, levy assessments maybe. You might see future assessments if they're in the negative. or even worse. But really, you want to make sure that the balance sheet's balanced, and then that they also have a good cash reserve. You want to make sure that they have enough money in the bank to really be to provide some sort of balance and some sort of padding to any sort of thing that could happen. One of the things that you'll also see in the forms that we have is the delinquencies, the HOA delinquencies. So it's good to make sure that the cash reserves heavily outweighs the HOA delinquencies. I think the last one I saw, they had about 1.5 million in cash reserves, and they had about 33,000 in delinquencies. So that's a really good balance right there, and that's a really good number to look at. And then, of course, you want to make sure you want to just kind of glance over the reserve studies and everything else, and make sure that they're budgeting for everything. That they're taking into account that you've got to change out small things. But yeah, outside of the budget and reserves, that's the gist of it. That's the big things you want to look for. Again, you just really want to look for um, the good financial standing of the complex.
Yes. So once you see that, then we're going to go through the bylaws and declaration. So this is going to be a very boring looking document, right? It's all dated back from when the complex was previously built. And it basically touches on the declaration of what that complex is going to stand for, and then the bylaws on how it's going to be ran. So you're going to find out in this document who is on the board, who's in charge of making decisions, the president of the HOA, and just basically break down how the the complex as a whole is going to run moving forward. Any type of document that will come out in the future, or any type of way that the complex decides to change, they're always going to refer back to this bylaws and declaration. It's a super important document. It's like their Declaration of Independence, right? Everything is around that. So super important that you read it. It's very hard to read. It's going to be a very dated document, but if you read that document, it's going to really tell you the goals for that complex and what they stand for. Yes.
Love it. Super important. Oh, my dog she wants to have the zoomies right now. She's chasing her tail behind me.
Oh.
All right. The next thing we're going to touch on is your board minutes. So you're gonna receive 3 of them standard. You might receive a 4th, which is going to cover your last annual. So you'll get your last 3 monthlies for sure, and then your annual. The biggest takeaways from your board minutes. A lot of times these aren't very girthy. There's not a whole lot that goes into them, but sometimes there's important stuff that goes into them. Your biggest takeaways are typically the unfinished business, what the HOA has previously had going on and currently going on, and then your new business, what they just started working on. A lot of times you'll see updates on litigation as well. If there's any sort of litigation against an HOA or a building or apartment complex, you will see that in the board minutes if there's any substantial updates. So realistically, you're going to see updates, and it's really just it's kind of it's got the human aspect to it. It's got people involved, so they're actively talking about it. It's not just a standard disclosure that has to be given. It's legitimately updates within the last 3 months of things that have been happening. And that could also go into repairs. If there's a water line that needs to be repaired in the building that unexpectedly busted, it'll give updates on things like that, maintenance issues, etc. But that's your biggest takeaways from the board minutes.
Yep. Super important. This is one that I really always look at, because if any new news has come up in the past month or so, it might not be in any of the house rules or the other documents that have been around longer, but it will show up here in this board minutes. Awesome. Okay, now let's talk about the summary of insurance, right? Not very sexy, but it's important. So each HOA is going to have a master insurance policy, right, to protect its common areas. And it's going to just give you a document. It's going to break it down. You're going to see where they have all their insurance money, who their insurer is, how much the policies are for, and what common areas are insured. So it's just a good document to read. It's also going to tell you if the complex has flood insurance. So a good chunk of them do have flood insurance, especially here in Hawaii, but some of them might not. So you just have to look out for that, because it is important to know if the complex has a master flood insurance, because if they don't, or if the policy is not very high, then you're going to have to get that individual flood insurance on your own personal policy to bridge that gap. So something to look at, especially with your lender. Your lender is going to be able to look into the insurance and see if you need to get additional insurances, because the master policy maybe is only up to so much. So kind of more so important for your lender to look at, and to tell you if you need to get more insurance or not. But good information about the master insurance policy. Not very sexy, but important.
Yes, extremely. All right. What do we got next? All right. So we'll go into house rules. So house rules, very, very important. Basically, these are the general rules you have to follow. It's just like, it's the day to day. It's the biggest thing that affects your real day to day life. Um, you know, some of the questions we get asked when we're asked about apartment buildings: can I have pets? How big can my pets be? How many people can live in this building? Can I
Yeah.
decorate my patio? Can I decorate my balcony? Um, where can I park? Where can guests park? Um, this just governs the rules of your day to day life. So you want to make sure you read through these, you understand them, you know them, and that you're not violating them. Of course, violations of HOAs depend on the HOA. They'll probably issue a warning first, and then you can start being fined by your HOA. And then at some point later down the road, you could be forced to sell your property by the HOA if the violations are really bad enough. So you definitely want to make sure you're in tune with everything, and you're following the rules that they have set forth.
Yes, this is one of the most important for just wanting to know about the complex. I know I get tons, I don't know about you, Ryan, but you said tons of people always ask about the pet policy or the vacation rental policy. And as much as we may know and can revert back to past house rules that we've seen in the past deals, but really you're not going to know your solid answer until you get those updated M1 documents for your transaction. And then that's when you're really going to get a final yes or no, what you can and cannot do. Because they could update things by the time that, Ryan and I have done a deal a year ago in there, and we have past rules we can look at and we can ask around. But in the meantime, they could change their policies, and we just weren't informed, because that's just something you figure out when you're in the escrow process.
Exactly. There's always some sort of cause and effect, some sort of something happens, and then they decide to change the rules. So, I think the last set of documents I got, we had probably about 10 amendments to the house rules attached. So we had old house rules plus amendment 1, 2, 3, 4, 5, 6, 7, and 8. There's always change. So
Yes.
definitely be on the lookout for that.
Yes. And sometimes too, people come to us as, clients, and you want to know right up front before you put in an offer. But really, we can try to guide you as best we can to tell you what it was in the past. But again, like, this is a contingency, this M1 document. So if you get into escrow, that's when you're going to get the real information. And then you can cancel if it's something that you don't like, if you find out the pet policy isn't what you want. We always try to find out that information beforehand, but it is a contingency. So you always do have that out if you do find out that they did change something, and something is you don't want to deal with it.
There you go.
Yes.
I think that's about it. What do we got next?
Okay, so we're bringing on Elena. We may have some technical difficulties here, but let's try. And she's going to be talking about the RR 105C. So this is another document that is important when you're getting the condo package. And it's going to be just a summary. So if you guys didn't catch last week's show, we talked all about it. So go back and watch that. But it's just another document in this package, and the lender is going to need it most importantly. So let's see. We might be having technical difficulties again. Shoot. She's texting me here.
Perfect. RR105C. Let me see if I can bring one up while we're talking about it.
Great idea.
You get any message from her? Well, while we're waiting, I'll just discuss the 105C real quick and why it's important. Of course, the lender needs to review this, and it gives a lot of conditions as to what the condo has going on in its current state, and it really kind of, for the lenders, it helps give that sense of security for issuing out that loan to the borrower. If the property is not a good property, or it's in bad standing, that might be a liability because it might not sell later down the road. If there's anything crazy going on, any crazy litigation, if it's in really poor condition, a bunch of different factors feed into that. But that's just a quick overview of it.
So we are having some technical difficulties, but I do have her on the phone here, so she's happy to speak on the phone. But you guys can picture her. She's amazing. Her picture's right here, but she's with VIP Mortgage, and really great lender, one of my preferred lenders here on the island. She knows her stuff, especially for condos. If you're looking to purchase a condo, it's really important to work with a local lender because they know the complexes, they know the area, what's lendable, what's not lendable. So the floor is yours if you want to speak here. We got you on the phone.
Hi, thanks, Kelly, and hi, Ryan.
Hey, how are you?
I'm good. Sorry about the technical difficulties. I'm super bummed, but I believe it's on my end. But very happy to be here anyways. Thanks so much for having me. This is a really awesome platform, and I think you guys are doing a really great job, and I feel really special to be a part of it today. Let's just get to it. I'm going to discuss a little bit about the RR105C and what that means to lenders, aka our condo desk, and how they look at it and what they're looking for, really, to describe if a condo project is warrantable or non-warrantable, which is aka a condo tell. So first, I have to share that, the information I share today could change tomorrow. Guidelines and rules in lending get revised and updated very often. So that's kind of what happened in the past year, is things have kind of changed drastically on the back end on what condo desks are looking for and how they're deeming them warrantable or non-warrantable. So I'm just going to share today for where we're at and what the condo desks are looking for. The RR105C is the form that breaks down specifics of the condo project. These specifics help identify if the condo project have any signs of being warrantable or non-warrantable. So with that being said, it's important to mention that the RR105C does not always cover everything the condo desk is looking for. And I thought that would be a really important topic today to share with you guys, is that the condo desks are having a problem with just the RR105C because it's not completely answering all the questions that they're needing. So what we're starting to do up front is ask for the RR105C and the lender's disclosure. Because if the RR105C is missing stuff, then the lender's disclosure is usually what answers majority of the questions, if not everything. But we have seen that sometimes HOA management companies don't have a lender's disclosure. And so if they don't have a lender's disclosure, then us, at least with VIP, so it might be different with different lenders, but we have a VIP condo questionnaire. This condo questionnaire can be in lieu of the lender's disclosure. And we provide it to the HOA management companies, and it looks very similar to R105C, and they just kind of fill out the condo questionnaire, a lot of yes and no questions, things like, has the condo project has any assistance or knowledge of the short-term nightly rentals, verifying if there's any deferred maintenance, like small items that the RR105C doesn't like really clearly state. Mm-hmm. And if for some reason they won't do lender's disclosure, they won't do the VIP condo questionnaire, our very last resort is asking them to fill out the Fannie Mae 1076 form. But I say last resort because a lot of the HOA management companies are really not liking that form. They're saying, oh, it's vague. It's asking us questions about the future, which we can't really answer. So we really try to upfront get the lender's disclosure or the condo questionnaire from VIP. So let's discuss a little bit about what they're looking for on those forms. They're looking for if there's any open litigations against the condo project, because that would be a really big red flag for financing. They're looking for how many units are owned by one entity or individual. So if there's a really large number or percentage of units owned by one entity or one individual, that becomes a red flag, because when it comes to voting time, individual owners have the ability to go and vote on items for the condo project. And if one entity owns majority of the units, then they're going to win every time. So then the individual owners don't have a say. Mm-hmm. And lenders, investors, they don't like that. So that's a red flag. Another one is the percentage of units owned and occupied either as an investment property, a second home property, or a primary residence. So the biggest thing to note on that is they tell you how many units are in the total condo, right? So say there's 100 units in the condo. Then they ask how many are owned by an investor, how many are owned as second home, how many are owned as primary residence. The difference on this, it really matters on how the buyer is purchasing the property. So if the condo project receives the RR105C, the condo desk, and they know that our buyer, the client, is purchasing either as a second home or an investment transaction, they look for any indication of short-term rentals. And if more than 75% of the condo project units are owned as investment or second home, then they must verify that the HOA does not assist, support, or benefit from the nightly rentals. And they'll also review for any condotel-like amenities. So they look for, is there commercial space being rented? Is there a desk at the bottom of the condo project where people can go rent a room? And then another really big one is now, especially when you're purchasing as an investment or second home, the condo desks, and not just VIP, this is nationwide, they have to Google. So they'll Google and they'll go to VRBO, Airbnb, Craigslist. They'll go and look, and they have to count how many units are rented out for vacation rental. And they'll count that, and then they put that into account with the RR105C, because people can say that they're occupying as a primary residence, but then if they're listing it as a vacation rental, then the condo desk has to then change that to a vacation rental. Wow. So it really, that's kind of the big change in the past year, because we never had to do that before. We could take the forms, and it's what the form said. They have to be, these RR 105Cs, they have to be current within the most recent 30 days. So they were really accurate. They were recent every 30 days, so it took into account new sales, new purchases, and that those units being reported as primary residence, second home, or investment were accurate. But now, because vacation rental is so prevalent, they're now having to Google, and that's a Fannie Mae and Freddie Mac guideline. Like,
wow.
the condo desks have to do it. So if you're working with a local lender, it's really important, because we actually, depending on who your mortgage broker is, but we all see and say, okay, this person is looking at Waikoloa Beach Village. I'm going and Googling it myself, and I'm looking. I'm like, okay, how many are listed here? How many units are there in the whole building? And then how many are listed as vacation rental? Because then I can kind of see, like, wait, are we going to maybe have a bump in the road here? Because it was warrantable before, but now look how many units are being rented as vacation rental. So that's a really good thing to keep in mind, is that condo desks with all lenders, they are Googling everything.
Wow, you guys are a bunch of detectives these days too.
I know.
Oh my goodness.
But the cool thing is, for when a primary, if you're purchasing as a primary residence, they don't look at the occupancy percentages as a threat unless there's an issue with the Googling. So if I'm going to purchase as a primary residence and I'm going to go to a condo project, the condo desk isn't really looking that hard at the percentages owned investment or second home. But once they Google, if that looks like a problem, then they're going to start digging into more of, okay, is this a condotel? And how does that affect the borrower?
Okay. Yes. And I know Alana and I always laugh about this, and we're like, grr, because you really, if you're working with an outside lender, especially, here in Hawaii, we always recommend working with a local lender, because we just do things differently here, right? We have our little nuances. And if you're working with a mainland lender and you say, hey, can you loan on this condo? They really don't know until they get this RR 105C and start the underwriting process. They might be able to kind of tell you yes or no, but they're on the mainland. They don't really know the area. They're this could be a one-off for them. And
Exactly.
And they don't really know. So they're like, well, we'll find out when we get the RR 105C. Well, we don't get this, like we said, until we get that M1 document package, which is about 10 days in. So that's why we're always recommending, it's so important working with a local lender, because they probably already know the question. I call Lena all the time and I'm like, hey, what's the deal with this condo complex? And she can tell me right off the top, oh, yep, you need to put this much down, this, and this. And they know the complex. So we always recommend, it's so important for that. So that way you don't get halfway through escrow, give the RR 105C to the lender on the mainland, and they do their running and they're like, oh, sorry, actually, we can't lend on that. And then your clients, you guys are heartbroken, and, we never want that to happen.
Well, and the thing is obviously I can't say that that's never happened to me or to our company, because it has. It's been like, okay, yeah, we just closed a deal in here 2 months ago. It was warrantable. Awesome. Let's move forward. We get into, escrow. We submit to condo desk, all the condo docs, and they come back and they're like, oh my gosh, we're so sorry. This is now, a condotel. It's not warrantable. But the benefit of already being with a local lender and that happening, we have the options to that exact day. We have all your documents. You're already pre-qualified, and we can flip you over to the portfolio loan with the new investor who will accept that. But mainland lenders don't have that ability. They literally they're like, oh, sorry, we're done. We don't do condotels. Can't do it. Then you have to go find a local lender, and you have to get pre-approved. You got to regather all your documents. They have to set up your loan app. then they can figure it out, and then they can broker it out. But if you're with a lender that's already ready, moving along, has all your documents, all it is we're now taking all of your documents, starting a new loan and brokering it out. But it's a much faster, smoother process if that were to happen, because we can't say that never happens, but you're in a much smoother situation if you've already started with a local lender.
Yes.
Exactly. There's definitely implications even before the contract too, if you're using a local lender versus off-island lender. One offer that we had put in originally, in talking with the agent, they were probably not going to accept our offer because we had an off-island lender. It was a good offer, but at the end of the day, they were like, hey, sorry, but our priority is to close fast. And I've had experiences where they close in 45 days or more, and we're looking for 30 days at max. So at that point, we had to switch lenders. We had to find an on-island lender, and thankfully we got our offer accepted after that. But had we just gone forward with that, this house that the client loved, we might not have gotten. So definitely a lot of implications between using on-island versus off-island.
Yeah, absolutely. And I feel like, especially in these past couple of years, that's become very prevalent just because of how fast the market's moving. Sellers are now learning, like, okay, yeah, we don't want to deal with the mainland, where a lot of the time you're talking to multiple different people. You're not really just talking to one loan officer who's then, being the liaison between the underwriting and the seller's agent and the buyer's agent. And you're really just working with one person here that you can reach every single day. A lot of times with those big companies, you're kind of getting thrown around a lot, which can make it really hard.
Yes. Agreed. I have a couple deals where, my clients are looking and they have a mainland lender, and I'll call it, oh gosh, I might need you on backup for this just in case. So, they're super quick if you ever do find yourself in that situation. You have to switch mid escrow, but we of course don't want that to happen. We'd rather you guys just reach out to us. We'll get you connected with Elena here on the Big Island. You do Oahu too, yeah?
Yeah, all of Hawaii.
Okay.
And Arizona.
There you go. Very diverse.
Yeah. Awesome.
But if you guys, come up with any questions after this video that anybody wants to ask, just shoot me over an email, and I'm happy to share all the information I provided today. And if any other questions come up, I'm super happy to help.
Great.
Thank you. And I put her contact information below in the description. So just reach out. We can connect you. And if you do go straight to her, let her know that we sent you.
Yes, absolutely. I'm so sorry for not getting on there, but thank you guys so much.
Oh, thank you. And I'm sad we didn't get to see your gorgeous face, but we got your picture here.
So thank you.
There you go. Thanks for joining us, Elena.
Thank you guys so much. Have a great weekend.
Yes. And thank you everyone for watching. You guys have a great weekend as well, and we'll see you next week.
Yeah, thanks for tuning in. And a quick shout out to my brother. It's his birthday today. He's big 3-2. He's getting old, getting up there.
Oh, that's awesome.
All right. We'll see everybody next week.
Aloha.